correlated are the markets right now? You have sophisticated measurements. Exactly what is the linkage right now of oil to equities, oil to the dollar?
Well, the most important correlation right now is the euro and oil. I mean,
really?
Literally, they are moving
Explain
down.
that.
They're moving down in lockstep. Essentially, you go back to last summer when oil started falling and the euro started falling. And basically, at that point, it was seen as a positive for U.S. equity markets anyway. But now there's a question.
But critically, as we see all the dynamics in this spread, this foreign exchange, and that, are there whispers that everybody's got it wrong and there's a legitimate slowdown, contraction, recession out there? Or can you still have an optimism like your Drew Mattis on the American economy?
Well, it's very difficult to argue that, at least in the U.S., that there's a recession building. You just had a third quarter where the GDP came in at 5%. Clearly, the Eurozone is a different case, and that disconnect between the U.S. and particularly Europe is the heart of the issue.
Julian, I want to ask you about something in your note from November that I didn't completely understand. You write, the market's manic plunge followed by a furious rally has awakened investors to the idea that risk perceptions now change more quickly. I didn't completely understand what that meant.
So basically, if you look at 2013, you look at most of 2014, volatility took a holiday. And suddenly we got to the fourth quarter of last year, and you started getting these moves completely consistent within the context of a Fed that could start raising rates.
And within the challenges that Mr. Draghi has, I've never looked at this, Brendan. I look off the Bloomberg at Norway's lousy nominal GDP because they've got deflation. I mean, it's numbers we're not in any way used to.
Again, we're not expecting to see this because what we're finding out one by one is which states are petro-states. Turns out that Norway, though a solid, responsible democracy, is a petro-state. The wealth of the last few years has certainly been linked to that, no question.
Let's bring back to U.S. stocks for a moment, because you have a target for the S&P 500 by year end of 2225, which is actually smack in line with the consensus of strategists that we've surveyed here at Bloomberg. For those of you on radio, we will tweet that out. But this bull market, Julian, is now about 6 years old. What is the quality of a bull market this age? Historically, what do we know about it?
What we know is it's going to become more volatile. So investors have to have more patience. They have to have dry powder. They have to be buyers of dips. Every single time in the last 5 years.
Can I interrupt and ask?
Sure.
Bring the chart up again, Scarlett. This was a brilliant chart. For those of you on radio,
Rachel Wearspan, by the way,
for those of you on radio, this is just the guesstimates of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 strategists in the street. Have you ever gone into a meeting in November or December where they trot out a January chart like that and say, "Hey, you"? Has that ever happened?
You're always under the gun in this business.
Yeah. I mean, it's amazing. I mean,
that would be a yes.
I mean,
I think we learned that in journalism, too. I've been told by editors, just publish. You'll be wrong tomorrow.
Scarlett, I don't mean to interrupt.
No, but please, get back to what you were saying. People need some dry powder because it's going to be very volatile in 2015.
That's right. And it's completely consistent with this divergence between Europe and the U.S. and this whole idea that you have a threat to European growth at the same time the Fed may begin raising interest rates. And so, perceptions of risk may change. And you look at January, there are a lot of uncertainties as we go through January.
Scott Galloway with us from New York University as well. It's difficult maybe to tie in your world with Julian Emanuel's, but I'm going to try to do that. There's an animal spirit that tech needs. Is the greater tech and marketing and entrepreneurial world enough to hold up the U.S. economy, given these global challenges? To me, it's almost a sideshow.
Yeah, although it gets a disproportionate share of the heat in the room because the new celebrities are tech CEOs. CES so far, I think, has been a big snooze, but it gets think about the amount of press coverage it gets, and try and find a really interesting story coming out of CES. The most interesting thing in technology today isn't in Vegas. It's today we broke ground on the new high-speed train in California, first in the U.S. Yeah. And also disruptive to the space travel industry. Elon Musk is launching SpaceX,
which is
reusable booster rocket, trying to take a 14-story rocket that re-enters the atmosphere at 1,300 meters per second and land it safely on an oil platform.
Excuse me, are we allowed to say meters per second on surveillance? I don't.
It's just really fast.
Can you compute that?
Yeah, in American, that's just really damn fast.
Thank you. That's the surveillance translation. Can you ban that, please? It's a surveillance break exclusive. Really damn damn fast. Galloway, really damn fast. Get that up there instantly.
So, Scott Galloway, is this potential tie between AOL and Verizon a really damn good idea?
You know what? I think it's a great idea. And by the way, most overrated former Google CEO Marissa Mayer, most underrated, who doesn't get enough credit, Tim Armstrong.
The stock, say what you will, there's the stock.
Good for shareholders, shed non-core assets. Programmatic media made some early bets on adaptive TV, now the third largest video ad network behind Google and Facebook. $4 billion acquisition for a $176 billion company makes all the sense in the world.
And you brought Marissa Mayer because there's been so much discussion of Yahoo perhaps having to tie up with AOL. If a Verizon AOL deal goes through, that leaves Yahoo kind of out in the cold, doesn't it?
Yeah, it leaves Yahoo waiting to be acquired by Alibaba or someone else.
This conversation, Brendan Greeley, wouldn't happen in Europe. My point is the discussion we're having with the fancy guy from NYU. You know, this doesn't happen.
Well,
in
Europe.
they
would be talking in meters per second, but I'm wondering, you know, this Verizon, the potential Verizon AOL deal, does it make sense no matter what the FCC decides about how to handle internet infrastructure, or are they waiting for the FCC to make the right call for them?
Are you getting to net neutrality again?
I am. I am. I almost said Title II, but I said it.
Say more. Why do you think that matters?
I wonder as Verizon considers maybe becoming a content provider, you know, does it have to wait for the FCC to rule on net neutrality, or is it a good idea no matter what?
I think Verizon's looking to take advantage of the fact that they control 100 million, or a third of the market, handsets in the U.S. and be the best one at serving ads to those 100 million handsets.
But, Julian, quickly, to take this tech discussion, this doesn't happen in other parts of the world. It's part of the unique American character, which is the immediate divergence.
Absolutely. And, you know, look at technology. You know, going back to the 1980s, the center has been the United States. And part of the reason that we like technology is that it's still such a robust business, not only in terms of future development, but there's tons of cash.